On this hot sheet, I discuss Warren Buffett's latest investments in the housing market, missing inventory, and Home Depot's second quarter earnings. Today is Tuesday, August 15th, 2023. I'm Byron Lazine, and the hot sheet starts now. Welcome back to this hot sheet on this Tuesday. Hit the thumbs up if you are joining me for a return or for the first time. Let me know which market you are tuning in from here if you're on the live stream. 1 week from today, next Tuesday, I will be in Dallas along with some other BAM people. Eric, the broke agent, a couple others, Bobby, our lead producer, who you often hear from here on the hot sheet, as well as Jill, our creative director. We're all going to be in Dallas for the Tom Ferry Summit. There's 1 week left to get your ticket. You can get the lowest ticket using code PRBAMSS. So if you've been on the fence for Dallas, do it. Get your ticket using code PRBAMSS. We have BAM Bash on Tuesday. It's only about, I think, 350 people max capacity. There's over 700 people that want to come. BAMXers, if you're a BAMXer, you absolutely get in. You can use code HOT, 10% off for BAMX. But if you're thinking about coming to Dallas, PRBAMSS, the link below to get your ticket to the Tom Ferry Summit. Can't wait to see you out there. Going to be in Dallas all of next week. Okay, yesterday, Warren Buffett made an enormous bet. Maybe some of it has to do with the market in Dallas because D.R. Horton is certainly a player down in Texas, but they're building homes all over the place. And Warren Buffett bet over $800 million on the housing market, specifically on builders. So does Warren Buffett believe that housing is going to be unstoppable these next couple of years, or is it more that he believes in these builders? Okay. In total, Berkshire Hathaway bought 5,969,714 shares of D.R. Horton. That would be over $700 million in D.R. Horton alone, over 152,000 shares of Lennar, and 11,000 shares of NVR. It's totaling $800 million on this investment. Now, these stocks that Warren Buffett and Berkshire Hathaway invested in are already doing quite well this year. In fact, they're at their all-time highs, or just about their all-time highs. D.R. Horton, for example, is up. Actually, today we just went live in the market before the market opened. D.R. Horton was up about 36% year to date. Now they're up 39% year to date. I'm just looking at the live ticker, and this is based off of yesterday afternoon after market news from Berkshire Hathaway. The Trades and Securities Commission, obviously they had to disclose this. And so D.R. Horton's up 2.79% today. They're almost going to hit their max. I think their max per share was about 130 bucks. That was back on July 14th. They're at $126.70. So they could hit their max here today. And if just looking at the chart in front of you, if you're on YouTube, D.R. Horton, Lennar, NVR, all of them have had huge increases, not only this year, but the last couple of years on their stock price, all near their personal all-time highs, all of them outperforming the S&P 500. This is since 2019, the chart in front of you. All three, D.R. Horton, Lennar, and NVR, outpaces S&P 500. That's incredible. You know, the hindsight in 2019 to go in on home builder stocks would have paid off and paid off big. Warren Buffett is now making this bet going forward. Okay, so he just announced that he's putting in $800 million, not chump change, maybe chump change for Buffett, but not chump change overall, $800 million into these home builder stocks. So he's betting on the future, right? Not the past. Oftentimes in sports, somebody gets a big contract and that contract is for what they're going to do in the future. Even if they were, all-star team the last 3 years, or they were an MVP, when they get that $100 million, $200 million contract, that's for their future, production for the team. Warren Buffett's betting on the same thing here with D.R. Horton, Lennar and NVR, that they're going to be future performers. How likely is that? Publicly traded home builders continue to post strong earnings. They've been posting strong earnings now for all of the last 3 years. I mean, look at how incredible their earning reports have been the last 3 years, right? And this is all of them put together. Pulte's in there, KB Home, Taylor Morrison, Meritage Homes, Century Communities, all have had incredible earnings going up. Most of them, a bunch of them here, up over $3 billion in earnings, net income by quarter. So huge numbers here by the home builders. And it's not just recent, it's the last few years. Okay, one of the reasons that maybe Warren Buffett likes the future of home builders is that their backlogs are similar to quarter two of 2020 and quarter two of 2019 as we sit here today. Okay, so quarter two 2021, quarter two 2022, we saw incredible backlogs for these home builders. Remember, they couldn't get supplies, and there was a lot of issues with labor as well during those two time periods. We're back now to a level that we saw in 2019, 2020, 2020. So does Buffett believe that because the backlog is down for the 9 publicly traded home builders, the major ones, that they're about to be able to be in a position here to take off and really invest in building new homes? One of the other reasons Warren Buffett might be bullish on home builders is the new and active listing count. It's very low. This is Steve Harney posted this on Twitter or X, whatever you're calling it today, from KCM, Keeping Current Matters, of course. We see that new listings is tracking at its all-time low. We covered this on yesterday's stream. Go back and listen to yesterday if you want an update on inventory across the country. New listings is going to hit the all-time low this year. That's what we're on pace for. 374,000 for the year in comparison to normal years, as KCM calls it, in 2017, 18, and 19, where we were up above 510,000 in each of those years. Active listings, 647,000 in 2023. These are Realtor.com numbers, of course. And 1.2 million, 1.3 million or above in 2017, 18, and 19. So Warren Buffett sees this and says, well, geez, where's the inventory coming from? We'll get to that in a minute. But where is the inventory coming from? If Warren Buffett and Berkshire Hathaway believe that inventory is going to remain incredibly low, and just maybe he believes what I discussed yesterday, which is that I think interest rates are higher for longer. The 10-year is just not cooperating once again today. We're going to probably be pretty close to matching. We met an all-time, or not an all-time, a year-to-date high on the 30-year fix yesterday. We're probably going to match 2022's high today, the way the 10-year is looking. And so maybe Buffett says, hey, rates are going to be higher for longer. The bond market is not cooperating. And builders are who can get home buyers, mortgage-backed buyers, control the market. And if they're going and borrowing directly from a builder, they can get the lowest rate. Maybe Warren Buffett is taking a look at that. 1 out of 4 home sales right now, 1 out of 4 home sales are new home purchases because of this number right here, because how little supply we have in the market on new listings and on active listings. By the way, all of these charts will be down below for you. If you're a BAMX member, by logging into BAMX on the daily download, you can become a BAMX member using code HOT to get 10% off. Here's another indication that the future of the new building market, the new construction market, is going to be hot. National Land Market Hotness. John Burns Research and Consulting put this together. Quarter 2 in 2023 shows a very hot or warm market when it comes to land purchases. And this is weighted using Metro single family permits, much hotter than we were in quarter 3 and quarter 4 of last year, back to what we saw in 2020 timeframe and 2019 timeframe, leading into those two markets for national land market hotness. One thing that maybe builders are going to be hesitant on, okay, One thing that maybe could slow builders down, because it's not inventory, they're in the power position there. The rates are actually working to their benefit, pushing more people into their arms because they can provide home buyers a lower interest rate. But one thing that might slow builders down would be insurance concerns. They're somewhat showing new home sales in Florida and California, home builders showing concerns specifically in those two states, that they're saying, hey, buyers have these concerns in these two states where the insurance is very high for these new homes. Okay, so Midwest, Northeast, Northwest, and Southwest, the insurance concerns are not impacting net sales at all, according to John Burns. In Texas, they're 4% are somewhat slowing net sales. So 4% somewhat slowing sales in Texas. Not a big number. Nationally, not a big number. You got 9% somewhat slowing net sales due to insurance concerns. Okay, now the Southeast, we start to see these numbers increase. The Southeast, it's 11% somewhat slowing net sales and 2% significantly slowing net sales. Okay, now we start to increase even more. Northern California, 20% somewhat slowing net sales, 29% in Southern California. And now we take Florida on its own, and it's 32%. It's a huge number for Florida. 32% somewhat slowing net sales. This is a report from Builders to John Burns Consulting LLC. 32% somewhat slowing net sales. These insurance concerns are huge in Florida. I know all about that. I'm sitting in Naples, Florida right now. The insurance here is crazy. It's happening in California. Heart goes out to what's happening in Hawaii. You think they're going to have some insurance concerns in the future. Hopefully they recover sooner than later, but you know there's going to be insurance concerns there as we continue to work through, or we're not working through it, but we continue to see more climate issues hitting some of these really well-populated areas. We talked about it a live stream recently, where you're seeing people migrate into these climate concern areas at a higher pace than they did in the past. So when we do have a climate issue, we've always had climate issues, obviously, going back into the history of the world, but we didn't have this many people living in these climate-prone areas. And as they increase, you see more and more destruction. So insurance becoming a concern, and maybe the one thing that could slow new construction sales down somewhat. See, now they don't have significantly slowing down net sales in any of these areas except for about 2% in the Southeast. But even Florida was just somewhat. Florida still remains a very hot market. You can use the code HOT, by the way, to get 10% off of your BAMX subscription down below, where you can get all these daily downloads and use them to help advise buyers and sellers. If buyers believe that new construction is going to come down in the next couple of years, maybe some of these slides would help re-educate them. Do you think Warren Buffett is going all in on the stocks? DR Horton continues to rip today as the market is open, now up over $127 a share, up over 3%. So do you think that Warren Buffett moving $800 million into these stocks means that new home purchases are going to go up or down over the next couple of years? I think it's safe to bet that they're going to go up, and it's because they're the only player in town. Remember, Zillow reported back in June, the end of June. So June 22nd, Zillow reported the United States needs 4.3 million more homes. The gap between families and available homes widens. This is, again, just back in the end of June. So this is a recent report out of Zillow. If you look here, Zillow's got, and I've got this down in the daily download, new households and family formation outpaces growth in housing stock. Yearly difference in total households formed, total families formed, and total housing stock. You see the total households formed and total families formed is up over 4 million, yet housing stock, total housing stock, this is 2021, sitting at 3 million. This continues to get bigger as the years go go along. 2015, the gap was 2.7 million. We needed homes. 2016, 3.1 million. 2017, 3.4 million. 2018, 3.6 million. 3.8 million in 19 and 4.3 million in 2021. I've seen some numbers in the Wall Street Journal as high as 7 million. You've probably seen the same. So we're missing a lot of inventory on this market right now. And where is it coming from? It's not coming from the resales. Probably not. I believe in the lock-in effect. I know Logan Motoshami over at Housing Wire doesn't believe in the lock-in effect. Almost every economist does believe in it, that it's holding back and locking in some potential movers. Not if, hey, somebody's getting divorced, they're going to put their house on the market. If somebody's retiring and they've got cash, they're not going to be as impacted. But for mortgage buyers buying their next home, looking at 7.25, as we saw yesterday, as opposed to 2.75, they're taking a pause. I mean, that's just the reality of what's going on. To not think that is true, I think is underselling how quickly these rates have gone up. Actually, if I can find it, this is how quickly the rate hike has happened. Steve Harney from Keeping Current Matters put out a graphic the other day on this. Let me see if I can find it. I mean, it's staggering how quickly. Here it is. Some historical perspective on the jump in the 30-year fixed mortgage rates last year. This is why the lock-in commentary is a real thing. Look at 2010 to 2021. These rates do not move at this fast of a pace that they have in the last year. They just completely jump off the page, what's happened to the 30-year fixed, and it's likely to continue to go up. What also went up here in the last 24 hours is Home Depot. They just had a earnings report. They beat earning estimates, but their sales have slid. Okay. So consumers are pulling back on big ticket buys. This is interesting to me because this might be a precursor for a slowing housing market overall. My initial reaction, or my initial prediction rather, outlook for Home Depot and Lowe's and these types of places going into the year was that they were going to have an increase in sales because of the lock-in effect, because people were going to say, okay, I'm staying put. I'm going to renovate the house to be what I want it to be. So big purchases slowing down for Home Depot. They have a 2% year-over-year sales decline as customers remained wary of big purchases and major projects. It could mean a couple things. It might mean that there is this incredible pent-up demand that is waiting for some type of relief on 30-year rates, where they're like, I'm not going to do anything to my house because I don't want to be here forever. I'm going to wait for a rate maybe closer to 5 to make a move, sell my house, buy the new one. I don't want to go through a renovation project. I think another part of this is when people do go and price out these projects from a contractor, the contractors are extremely high because there's a shortage of labor. They're also remaining, inflation. They've kept their prices elevated. COVID, some people are just flat out ripping people off out there. There's a little bit of that going on, but there's such a shortage in labor because of, decades of our high school guidance counselor, pushing people into 4-year general studies degrees and taking out debt instead of getting people excited about the money they can make in the trades. Imagine if the last couple decades we were actually educating our public high school students to go into the trades. How many less people would be in college debt? How many people would be making a much more significant living than they're making right now and actually making something of value in their community? We need people in the trades. Okay. Earnings per share for Home Depot was $4.65, beating expectations of $4.45. Revenue was $42.92 billion versus the $42.23 billion expected. So Home Depot sales down a little bit. You can see that here. Home Depot quarterly net sales being down just a little bit. So potentially a precursor for maybe a slowing market. Altos Research just came out yesterday and said they expect a cooling in housing by Q4 of this year. This might be one of those precursors, okay? But we're not seeing signs of that in the general economy. Well, Wall Street Journal reported today and others that shoppers are outpacing expectations. Retail sales, a measure of spending at stores, online, and in restaurants, rose seasonally adjusted 0.7% last month from the month before, Consumer Department said this morning. That was a faster pace than in June. It was higher than the 0.2% increase in consumer prices last month, a sign that American spending is outpacing inflation. Okay, so this is also it's obviously a resilient economy right now that we're dealing with, despite rate increases by the Federal Reserve. It also speaks to, okay, is the job market so good right now that consumers are just not feeling the pain and they're out there spending? These would be yellow flags at the least for the Fed and what they're going to decide to do in December with the next rate. Now, these retail reports did coincide with kind of what happened with the Home Depot earnings report. Okay, so some of the things that were up would be, let me get to it here. Building materials essentially were down, and I don't want to call it building materials because there was a different name. Gas station went up. Okay, here it is. Furniture sales slumped 1.8%. Electronics and appliance stores also reported a 1.3% drop. So furniture, appliances, obviously not building materials, but another precursor like the Home Depot, that folks are not spending as much on their home. Maybe they're hunkering down with what they have. We've certainly seen that in, in just the transaction count this year. July numbers were boasted most by a 1.9% jump in spending at online realtors. So sporting goods, and that makes sense. Sporting goods, July coming into, fall sports season for the kids. All right, let's take a quick look here at the 10-year. Didn't look good earlier today. Okay, it's down off of the 4.2 marker. We were up over 4.2, getting close to 4.25 on the 10-year. So that's good. That's good information for us. The 30-year, of course, not great information. We're still pretty high on the 10-year. The 30-year matched or broke the highest level we've seen all year to date, which was 7.22 previously. The Mortgage News Daily survey came in at 7.24% yesterday on the 30-year fixed. Last year's high was 7.37. So we're getting really close to that. We'll continue to watch for what happens here. What you should be watching today at 2 p.m. is the Real Word podcast on this channel. Make sure you're subscribed. We're going to go over a survey that BAM did in partnership with 1000 Watt. We're going to go over some of the highlights. You can get access to the entire survey if you're a BAMX member, but we partner with 1000 Watt and surveyed over 1,000 agents. 83% of agents confident in their lead conversion, yet 46 are unsatisfied with providers. We're going to dig into a little bit of this. There are some highlights on nowbam.com. This is broken up between solo agents and all respondents and team agents as well. So we're going to give you an overview of that on the Real Word podcast on the channel today at 2:00. BAMX members get access to the entire study. Again, over 1,000 agents were surveyed. We're going to start to do this quarterly with 1000 Watt. 1000 Watt, of course, is the premier branding agency in all of real estate. And I believe Mark Davison, the co-founder, he'll be in Dallas next week. You should be there as well. Use code PRBAMSS to get $100 off your Tom Ferry ticket. If you have not done that, I'll be in Dallas, and we've got the BAM Bash on Tuesday night. BAM Camp prices also increase in the next 24 hours. So make sure that you get your ticket to that. 25% off if you are a BAMX member. All right. Hope everybody has a great Tuesday. Work hard, be productive. Q4 is going to depend on it, and we'll see you back here tomorrow. Till then, toodaloo.